What is going on, investors? Time to take a look at another stock today. We're going to take a look at NIO, the electric car maker out of China. They just reported earnings today, and we see the stock is reacting somewhat negatively to the news, but this stock is still up near all-time high. We'll jump into the stock chart, take a look, see if there's a place where we can buy this stock. We'll take a look at the numbers as well, and then maybe give you some other options here if you don't necessarily want to go pure long NIO, but maybe get some exposure to it. We'll talk about that. This is a company with a $15.7 billion market cap, and it was a relatively cheap stock not too long ago, was down in the $2-3 range. So this is a stock that's had a nice move. When we take a look at the vehicle numbers here, they are actually phenomenal. So we got 2019 Q2 here, we got Q1, and then they give you Q2. So they're giving a quarter-over-quarter view and year-over-year view. We see here vehicle sales accelerated not only year-over-year by 146%, but they accelerated 177% quarter-over-quarter. That's absolutely phenomenal. Probably even better for you as an investor is this vehicle margin. So they were actually losing money on these vehicle sales back last year, and then in Q1, those margins went positive here at 9.7%. Now, I saw the CFO's comments. They were actually targeting a 5% vehicle margin, so they actually bumped that up to 9%. So that'll be interesting. So what I very first blush kind of look here is what I would be anticipating with NIO, or one thing I would be hopeful for if I was gonna buy shares or I was already a shareholder, is you don't necessarily need this 177% growth. Obviously that continues, that would be phenomenal. But if you can continue somewhere in this type of growth or any type of growth, but these margins I think are even more important. Okay, I think they've got a nice product and it seems like they know what they're doing. I think these top line margins, top line growth is going to grow quarter over quarter, year over year. What's more important is this margin here. If they can expand that margin as they sell more vehicles, you got to assume with the economies of scale and things like that, they probably will be able to do that. I would keep very, very close eye on that. So we move through to a total revenue. We see those are up huge, 170%, 145% year over year. Gross margin tick positive. I mean, we had a gross margin of negative 33% last year. And even last quarter, it was negative 12%, and that's ticked up to 8.4%. So it's showing me this company is starting to reach scale. Is it at a tipping point? I don't know. That's definitely a question that you want to ask yourself if you're interested in going long on this business. Now, we'll jump into the rest of these numbers here, these other expenses, and explain why we've got such a big net loss. So first thing is first, though, we'll take a look really quickly at the balance sheet. So they've got a year-end view here. They've got a 6-month in view here, and then they show it to you in United States dollars because this is a company that does business in China. They're putting their financial documents in their local currency here, the RMB. So that's just something that you want to keep in mind. What I'd like for them to do is do a comp in USD, but we can do it in the local currency. It's about the same thing. Everything looks pretty darn good here. You see cash ticked up huge. Okay, that's likely due to some kind of fundraising. In fact, when I was digging through the press release, they talked about different investors that have stepped in and injected capital into the company, obviously for exchange and equity and things like that. And so this company has been in fundraising mode. It's diluted you a little bit as a shareholder. We'll show you that in a minute, but it's not completely overwhelming. It's certainly not unexpected in an early stage company, especially an early stage manufacturing company like this. From the liability side, we do have some long-term borrowings here, which I do believe means just long-term debt, but that's been flat. It actually went down a little bit year over year. Our liabilities ticked up a little bit, but boy, they have quite a bit of cash here and restricted cash. Everything looks pretty darn good. From an inventory as well, they seem to have a fair amount of inventory. It's actually a little bit more from the beginning of the year. When you're growing your top line vehicle sales this quickly and this fast, I actually think having inventory is probably a good thing because this is not likely finished automobiles. This is probably a lot of like parts and things you need to build those vehicles. So the fact that they've actually increased that is probably a positive sign for the future quarters because they have the inventory to potentially continue to deliver more and more vehicles, which is exactly what you want this company to do. Now, coming down from a revenue, again, this is in the local currency here. This is not in United States dollar, except for this column here. So we've got a year-over-year view here, and then we've got quarter-over-quarter view. Man, actually, they've got the vehicle sales up here, and man, it's just been exploding. So they're obviously doing something right. Their models or whatever they're coming out with is definitely resonating with the market. We see here from a total cost of sales here, we spent $3.4 billion to make $3.7 billion. Again, this is in the Chinese currency. And so we did actually achieve positive gross profit, and we see from the year earlier it was here at 504 and went to 167, and now it's positive 313. That is exactly what you want to see. Okay, obviously it's driven by this top line growth as well, but they're able to actually expand margins at the same time. That is extraordinarily positive as well. Now, unfortunately, that's not all the story on the expense side, because we have R&D costs, SG&A costs, and some other operating either income or loss as well. That's relatively minor, something I wouldn't really even factor in. So from research and development, actually take a look. It went 1.3 billion down to 522 last quarter, up just slightly to 545. But considering we basically, I mean, that's like you almost tripled your vehicle sales up here. Okay. And so for R&D to only tick up just a little bit shows me, yes, they have reached some kind of scale, at least with the models and the cars that they have now. They spent all this money last year. They obviously they have to continue to do R&D, but it looks like the bulk of at least the models that they have now has been sunk in, and now it's time to churn that out. Now, from a selling and general administrative, it looks equally as impressive to me. You were at 1.4 down to 8, up a little bit to 936, but again, we almost tripled sales. So that to me, I can I can understand an increase here, especially when you're accelerating the top line this much. Now, loss from operations, we take our number here, this gross number, and then minus off our total expenses here. And obviously, it's not quite as impressive. We've got quite a substantial loss, although it's shaved off from the previous period, about 400 million, I guess that would be. And then it's almost cut. It's actually more than cut in half from the previous period. So they're moving in the right direction. If you have faith in this company, they are moving in the right direction. Now, one thing I do want to point out is they are diluting you a little bit. So we've got last year here, we had 1.026 billion, and now we're up to 1.054. So, that's not insignificant. But again, when you're growing like this, early stage company, I think you're going to expect it. Just keep in mind that it will keep a lid on the stock just slightly. Okay, not really significantly, but just slightly. So for me, gosh, everything looks pretty good here for a company that doesn't make money, okay? Obviously, it'd be much better if this company made money, but would it be at a $15 billion valuation when it's at scale? I'll let you to decide that. Jumping over to the stock chart, we see here this big candle today. I think the stock actually traded up initially on the news of earnings, and it's going to hit its head up here. We actually see huge volume right here. A lot of people acquired their shares in here. So I think you have a lot of shareholders that are just willing to either take a small profit or cut their losses here, break even on this stock, because once it peaked up over into this price territory, a lot of sellers stepped in and this stock sold off. Although we don't got huge volume here, and we are retesting kind of a support line here. This stock is basically in the middle of a range. I see we have a range up here to call it 1575, and then we've got the bottom of the range closer to 1075. We're kind of smack dab in the middle of this one. Personally, I see that we gapped up here. The stock was really, almost undercovered or underfollowed. It gapped up. People started paying attention to what it was doing. Boom, it hit this top here. We sold all the way back down to here. And then now we retested up here. I would actually anticipate the stock retesting down in here, probably somewhere between 12 and 10. So if I personally wanted to go long NIO stock, I would look to get my shares I would actually guess between 10.50, 10.75, and call it about $12. That's where I personally would feel comfortable buying shares of this company. Now, Personally, I probably would not want exposure directly to this company. It's nothing personal against this company. We do have a political environment right now that I don't think is as great between China and the United States. And I actually think it won't matter who is elected in November, whether we have the same administration or a new administration. I actually think there's still going to be hostility between these two countries. We obviously see the potential ban of TikTok. There might even, I've seen talk of actually delisting or not allowing Chinese companies to list on our stock exchange. So that is a risk you want to factor in when you're investing in companies like that. Another way, I wouldn't say this is completely a way to get around this, but one way you could mitigate your risk just slightly is maybe invest in an ETF that has exposure. So the biggest holder is this Vanguard fund, VWO, but the ETF that had the largest allocation is actually this KGRN, and they had 8.69% of their portfolio weight, which means 8.69 of their total holdings, the entire portfolio, is actually exposed to NIO, which is actually really high. So if you want some, again, I think you want to do your research on these ETFs, see what the expense ratio is, see what the volume is, other companies that are in the portfolio. But for me personally, I would probably go this route rather than jump in here at NIO, unless for some reason we were to really break trend and come down here to $7 or $8 and maybe fill these gaps and things like that. Then yeah, maybe I'd take a flyer on this, because then the valuation would probably cut this in half. Then you'd be at a $7 billion valuation. This is a company that, if they keep moving things in the right direction, actually could be profitable in, maybe 24 months or so. I don't know if that's exactly what they're shooting for, but this is a company that is moving in the right direction. If they keep moving in this direction, things will turn positive relatively quickly here on this bottom line. Again, we see it went from 3.2 down. I mean, we've cut it in just in a year. We've cut it basically in a third. So yeah, now we're losing 1.17, and that compares favorably to the previous period where we did about 1.7. So if we keep shaving off, 500 million off each time, yeah, we're going to be profitable pretty quick with this company. So for me, I think there's some political risk with these types of stocks and these types of listings on the United States exchange. If you're comfortable with that, this might be an interesting one. I will just note we are basically close to all-time highs. I like to buy low and sell high. I don't like to buy up here at the tops, because, rarely do stocks trade up at the top and then just keep going up. Okay. Yes, some stocks do, but a lot of them, in fact, the majority of them don't. They make tops and then they come down. So I would wait for this one to pull back a little bit, but this is not too bad. I mean, we've analyzed some other companies here on the channel where they got no product, no revenue, no profits, whereas at least this company doesn't have any profits, but it does appear they have a viable product, and it does appear that management is executing at least at a pretty high level, in my opinion. So NIO stock, not one I personally would touch straight up. I would probably go this ETF route if I was dying to get into this name. Now, if it does trade down, it fills these gaps, comes all the way down here to call it $8 a share, then it definitely would become interesting to me, because I think the valuation and the risk reward at that point would be much, much higher than it is today. So that's just my opinion on this one. Let me know down in the comments below what you think. Maybe consider subscribing and hitting that like button as well if you like what we're doing here on the channel. We'll be back again very soon with more. Good luck with your investments.